Hello, friends. Today we're taking a look at CVS Health Corporation, ticker symbol CVS. This stock has been hammered since the last time that they reported earnings. So we're going to be looking at the stock performance in the last 5 years. We'll talk a little bit about some of the current news and what happened, especially with the earnings. What did they miss? What did they say that the problem was? And then we'll jump into the last 10 years of fundamentals. And finally, we'll try to find a fair value and see if this is a great opportunity for us to buy either long term or maybe like a short term a trade. So that's what I'm going to be doing today. Welcome to Money Talks with Martin Reyes, where we try to learn to take care of our money and find great companies at great prices. Is CVS a great company? We're going to be trying to look at that. One of the things that it caught my attention, number one, is, of course, is the recent drop on price that we have experienced with CVS. CVS is a company that I used to have in my portfolio. I bought it, but I'll tell you where I bought it in a moment. So in the last 5 days, it has dropped 3.6%. In the last month, almost 18%. Year to date has dropped at 20%. And in the last year is down 18.2%. I bought CVS whenever it was somewhere around the 60, I think it was 69, somewhere around there, 68, if I remember well. And I sold it. I was lucky to sell it somewhere around the $80, $78. So I made about 15% in about 6 months. So that was pretty nice. And I sold because one of the things that I've been noticing with CVS is that they keep cutting the estimates that they're having. One of the other things that I will like to mention is that they are a dividend payer. Right now they're paying $2.66, which is about close to 5% dividend, which is not bad. That's another thing that I didn't calculate with the percentage that I got is I don't remember how many dividends I got, so that might have bumped my returns whenever I did that. So whenever we look at forward PE, right now it's a 7. That's pretty low. Their average PE in the last 10 years, we'll see it's about 10. So that is about a 30% spread right there. Although analysts are thinking that the price could go back all the way to close to the $80, which will be quite a jump, almost a 40% jump. So what's happening with CVS? Well, they reported back in May 1st, not too long ago, and they missed by 40 cents. They were expecting to hit $1.70, but they only reported $1.31, and which is about a 23% difference. And when it comes to GAAP EPS, they were expecting a $1.3 $1.32 EPS in GAAP, and they actually reported only 88 cents, which is a 33% drop. So they miss on revenue also by almost $767 million, which in an $88.4 billion revenue is not that much. So I'm not worried about that. They will be reporting again on August 8th. And they are expected to meet the EPS that a little bit higher of what they missed before. So that can be a little bit concerning. The EPS revisions in the past 90 days is down 16%. And one of the reasons why, at least what they reported, reasons why they miss on their EPS is because of cost of their Medicaid cost. The cost for its Medicare Advantage plans were very, very high for them. They lost almost 19% after missing the earnings. And if we go into this Forbes article a little bit more into it, you can see a lot of the different issues. One of the things that they mentioned over here that it also created a problem for them was their expectations. So, or their forward-looking. So they cut their outlook. They went from somewhere around $8.7 that they did last year. Now they're expecting in a range of $7 to somewhere around $8.3 per share in adjusted earnings based on 2024. So, and that the primary issue is higher expectation for medical costs. So they're struggling with that. That will be about a 70, I think it's like a close to between 7 and 8 times earnings at $7. So now let's jump into the numbers of the past 10 years. And before that, I would like to ask you to subscribe. Thank you for all of you guys that have subscribed so far. If you like this video, click a like. If I seem a little off, it's because I'm sick and you probably can hear my voice. So I really love hearing from you guys. Leave me a comment. Tell me where I'm missing anything. If you are thinking about jumping into CVS and maybe, or you think that we should stay away, I would love to hear from you. A couple of things it will be, I think we should look at CVS and see if it is a great company, something for us to hold for a long time. Well, the revenue has been growing steady in the last 10 years, somewhere close to 9.1%. And in the last 5 years, about 7.6%. I wouldn't consider CVS, based on these growth rates, a great company, but a good it's good to have companies that are growing close to 10% a year. That's not bad. But as you can see, it has been slowing down. And one of the things that I will be concerned is their gross margins. Their gross margin is 17%. That means that it's very susceptible to cost changes. And I think that's part of the reason, as you can see in the last earnings, that it got really affected because of the cost going up. Another thing about is that their earnings have been growing very slow. So this will be an issue for me. And this is the issue that a lot of people are having whenever they're projecting, let's say, a $7 in the low range of $7 of EPS all the way to $8.30. As you can see, they have been remaining almost flat for quite a while. They go a little bit up and down, but they have just kind of remained flat. In the last 5 years, growing 2.3% or 3.7% in the last 10 years. Profit margins very, very low at 2.58%. That is very concerning. So this is quite a risky company, I will say. When it comes to free cash flow, numbers are not the best. Free cash flow has been dropping since 2021, which is a problem. Last 5 years is down 4%. In the last 10 years, it has only grown 2%. So it kind of it's heading back to the average free cash flow that they used to have before the pandemic and before acquiring all the different companies that they acquire. If you want a little more in depth of who CVS is, I made a video earlier in the year explaining a little bit about their business. So I will put a link in the description or somewhere around here. Free cash flow margins, once again, low at 4%. The free cash flow yield right now, it's 11%, but I think that's a little deceiving because of how much free cash flow they produce because of COVID and all the stuff. Book value has been growing again at 3.6%, or in the last 10 years at 6. Those are really low. Return on equity, 10%. That's a little low. That's actually, yeah, it's not that good. Return on invested capital, 6%. That's really not good at all. Same thing with return on equity. Dividend stay flat from 2017 to 2021, and then it started growing again. Payout ratio is at 46%. Long-term debt, it's a little concerning to me because right now we're taking the average free cash flow. It will be somewhere around it will take them about 6 years to pay for it. But if we were to really look at the average, somewhere around, let's say 7%, what they're thinking, so that will be let's say $58 a share of long-term debt divided by $7 of free cash flow average, which is what they were. Let's say that's what they're doing. That will be at 8.2 years. That is higher than the 5 year that I would like it to be. Shares have been growing or remaining flat. That's not good. There's a lot of different bad things for CVS as a long-term play. I wouldn't do that. So now I'm going to be jumping into some prices and valuations. I just want to encourage you to do your own due diligence. Understand that I'm not a financial advisor. I'm just a YouTuber, someone that likes to analyze stocks, and this is for educational purposes. I'm not making any recommendation, but I would love to hear your not recommendation, but your thoughts about this stock and all the stuff that I'm sharing with you today. When we look at the historical multiple valuation, we see an average fair price of somewhere between $83 to $86. If we were to use the revenue-based valuation, we're looking at somewhere around $86.3, but actually I think I'm using a high future PE, so I will probably use a 10, which is what it really long term it has been at, and that will give me a price of $60. When it comes to EPS, using once again, we're going to be using here 15% growing at 15 PE, growing at 3.5 gives me a number close to $50. Payback time, I wouldn't be using this for valuation. This kind of free cash flow gives me a price somewhere around $64 to $91. And I will not be using this number, but just in case you wanted to know the owner's earnings valuation, that will be somewhere around $98 to $90. I think this is not the best valuation for CVS, so that's why I'm not going to be using that or payback time. Whenever we put all these numbers together, we see that the average fair value price, it's somewhere between $70 to $65. I will probably use something in the middle, somewhere around 67 if we wanted to get a 20% margin of safety. If we just wanted a trade, we're looking at somewhere around $54 as a fair value to jump in. I am considering personally maybe buying half a position, which is about 2.5% of my portfolio, and just take it as a risky play. I try not to put more than 5% in risky plays. So, and I will probably put a 15% down. 15%. So if it drops more than 15%, I will sell. that's probably what I will do, and just kind of look, because I don't know. I think that this could be a good opportunity, especially if it bounces back to $70 or even more. So those are my opinions. I don't know what you think. I would love to hear your feedback, and I hope to see you in the next video.